Monday to Friday at 12:30 p.m. only on Bloomberg Quint.
My name is Ayush Alavadi and you're watching Primetime Live on Bloomberg Quint. Let's have a look at today's headlines. The government plans to borrow 2.88 lakh crore rupees in the first half of 2018-19. It'll also borrow money for a shorter duration than it typically does. The government is also mulling a proposal for a joint venture between NTPC and two state-run power financiers to bid for stress power assets. ATPG-led consortium is set to take over Fortis Healthcare in a $1.2 billion deal. Bloomberg reports that the transaction could be announced in the next few days. It's a promising start to the expiry week. The Nifty rises 130 points as heavyweights like SBI and HDFC Twins rally. And Uber pulls out of Southeast Asia, sells its operations to rival taxi-hailing service Grab. Straight on to the top story. The Indian government plans to borrow 2.88 lakh crore rupees between April and September in the upcoming fiscal. The Department of Economic Affairs, Subhash Garg, said that the net borrowing would be around 2 lakh crore rupees. Nikunj Ori sums up the development.
The government's gross borrowing for the first half of the financial year beginning April 1 would be 2.8 lakh crore rupees, which is about 47% of the government's total gross borrowing plan for the next financial year. On net basis, the government would borrow about 2 lakh crore rupees in the first half of the next financial year. The government has decided this time that it would use additional 25,000 crore rupees from the National Small Savings Fund to fund its fiscal deficit and would reduce the buyback of government securities by rupees 25,000 crore rupees, which would then bring down the government's gross borrowing number for the entire financial year by about 50,000 crore rupees. Now, this would, however, not have any impact on the fiscal deficit, a government official told reporters. The government has also decided that it would come out with shorter-term securities in the 1- and 4-year bucket.
The government and the Reserve Bank together has decided to reduce the buyback by about 25,000 crore. So again, 71,000 crore or 71,941 crores. The buyback has been reduced by 25,000 crore
for FY19.
For FY19, right? Second decision taken is that we expect larger flow of funds in the NSSF, and budget had spoken about 75,000 crores to be used for funding fiscal deficit. It has now been decided that instead of 75,000 crores, we'll use 1 lakh crore to fund the fiscal deficit. So that in a way would be further reduction. From 75,000, we will raise it to 1 lakh crore. Right? Small savings, right? So taking all these things into account, we are planning gross borrowing of rupees 2,88,000 crore in H1.
And of course, Bloomberg Quint's Ira Duggal sums up the key implications of the borrowing roadmap in this report.
The borrowing program announced by the government today has come against the backdrop of a particular market, and that market is well summarized in this one chart. Between last year, at the start of the fiscal last year, and this year, you've seen almost 100 basis point increase in the 10-year bond yield, and the borrowing program today tries to prevent a further upside in these bond yields, which can be very detrimental, not just for the government's finances, but also more importantly for the economy. So the government has done two things. One, it has addressed to some extent the near-term supply-demand imbalance in the bond markets by reducing the first half borrowings, only 2.88 lakh crore being borrowed in the first half, as you know, and that's less than 50% of the total borrowings. So typically they would front-load the borrowings. This year they're actually not front-loading the borrowings in the hope that the second-year market conditions will be a little bit better. The other thing that they have tried to address is the oversupply of 10-year bonds in the market. And Swamijit Niyogi of India Rating explained this to us well, said that 40 to 45% of the central government bonds are in the 10-year bucket, and about 70% of the state government bonds are in the 10-year bucket, which then means that this one benchmark bond tends to see a steep sort of change in the demand-supply dynamics when the demand from banks reduces as it has now. So the government has tried to address both the immediate sort of demand-supply imbalance overall in the government bond market and then the demand-supply imbalance in the 10-year bucket by changing the short-term tenure of the bonds that they are borrowing. They will be borrowing more in the 1 to 4 year bucket in particular, and then in the 5 to 9 year bucket as well. Those are two things that the government has done to address market concerns. Will this mean a short-term downside in bond yields? Yes, most market participants said that tomorrow they should see a positive reaction on the bond yield side. But I just want to caution that do not expect bond yields to come off very steeply, and the next chart will explain why I'm saying this. Now, remember last year, through most of the fiscal year, you had a surplus liquidity scenario. This is the banking liquidity indicator compiled by Bloomberg. This is the neutral line, and anything below that suggests surplus liquidity. So through most of last year, the government was borrowing between 15,000 to 18,000 crore per auction amidst surplus liquidity. Still, bond yields moved up. Now you will be in a scenario where they will borrow lesser, 12,000 crore in the first half of the year per auction, but they will be doing this borrowing amidst neutral to deficient liquidity conditions. So while there could be some downside in bond yields, you would not expect a correction all the way back to the levels that we had seen at the last start of the last fiscal year. The reason for that being that the liquidity scenario has changed as well. All the demonetization liquidity has flown out. The gap between deposit growth and credit growth has widened. Credit growth has picked up. Deposit growth has come off. So all of that will mean that pressure on bonds, or at least relatively higher bond yields, will persist.
Well, in other news, the Power Ministry will take up a proposal made by NTPC, PFC and REC to form a joint venture aimed at managing some stressed power assets. Power Minister R.K. Singh today said that the plan will have to be discussed with the Finance Ministry before the nodal ministry can give its go-ahead. Bloomberg Quint's Bhanvi Arora sums up the key developments.
The Power Ministry is looking at a proposal sent by three power PSUs, Power Finance Corporation, NTPC and REC, to form a joint venture to bid for stressed power projects that will go through resolution under the Insolvency and Bankruptcy Code. Power Minister R.K. Singh told us today that this proposal will very soon be taken up by the Finance Ministry. Now, the objective of this JV is to bid for is to take over the stressed power projects and execute them till the demand situation improves, which will then later be sold out at a better fair value. Now, the minister said that the proposal is at a preliminary stage and will be consulted with the Finance Ministry and creditors, which will consider RBI and its legal framework. Now, the new RBI norms on resolution of stressed assets will push almost 70,000 megawatt power projects under the Insolvency and Bankruptcy Code and will hit the sector hard.
Well, our national news editor, Sajid Mangat, also joins us in the studio right now. Sajid, I want to understand, would this move really help reduce stress in the sector?
There are a couple of things here. One, the stress is primarily caused by coal shortage, or there's no long-term power purchase agreement between these plants with the state government, and so there is no certainty of sales there, and other regulatory orders which are not allowing them to raise prices. So these are some of the reasons why many of the plants are under stress. coupled with the fact that from the Feb 12th notification of Reserve Bank of India puts a lot of pressure on the banking system to put all these assets on a resolution path if there is a default there. So that brings in additional stress of nearly 1.74 lakh crores into the system, because there are estimated 40,000 megawatts of power producing assets, or 34 assets which are in question, and that would mean that going into summers there would be a big issue for all the states and all the consumers there. So that's a big question which is there, but the bigger question is that how are they going to take over these assets, because this takeover of assets have not been easy under the resolution process as of now. You have promoters fighting, you have creditors fighting, you have a resolution professionals and other third-party entities who are getting into it. So there will be a lot of a legal battle before these stress assets can actually be managed by this joint venture of public sector companies.
Sujit, those are some interesting points, and just to get some more analysis on them, we're also joined by Debashish Mishra, partner at Deloitte. Debashish, thanks so much for joining us live on Prime Time. Now, those are some of the points that Sujit was bringing up, and Sujit, please stay on with us for this conversation. It's no secret, Debashish, that the power sector has been reeling under this bad loan pressure, but is this the right way forward? A three-way joint venture like the one that's being proposed, is this, well, the solution?
It could be one of the parties which can take over some of the assets, but like the previous analysis showed, the stress in the system is in excess of probably 40 gigawatt, 20 gigawatt of completed projects which do not have contracts, and another 20-30 gigawatts of project at different stage of completion. So the question is how much of, even if such a joint venture were to come up, I don't think they will have the ability to take over all the stress assets. So it will be a combination of many of the existing balance sheets. Unfortunately, unlike the steel sector where there are existing balance sheets which are or foreign players who are very keen to participate in the resolution process, unfortunately in the power sector there are no such balance sheets, and a couple of foreign pension funds have shown interest, but they are also looking for the right technical partner and the platform to bid for these kind of assets. So it's a long drawn process, and the genuine demand revival actually would solve part of that problem.
Debashish, the biggest issue is that nearly 6 to 8 months back, we saw state governments reluctant to sign those long and medium term power purchase agreements because they saw some of the prices of renewable energy falling down, and so they don't want to tie in those things. Now the biggest issue is that states reluctant to come in and sign this PPA. What can the government do to ensure that these PPAs are signed? Because even if you get a joint venture of public sector companies coming and managing these assets, unless you have the PPA in force, there is no way they can bring in some stability to these projects which are nearly 20 gigawatt of projects which are already built. What is the way out?
Exactly. So that's what I am saying. Being it's a concurrent subject. So center can't force these states to sign PPAs. And genuinely some of the bigger states have still got PPAs which are running at 50% or less capacity utilization. So till in the overall system is running at around 60% capacity utilization in the existing PPAs. So unless that reaches around 70-75%, the states would be reluctant to get into newer PPAs. But what will happen is, you would have seen the last few IIP numbers really looking up now. So if there is a genuine industrial recovery, then what will happen is the power prices in the spot market would go up, which is already hardening, particularly in the southern region. And if that on a sustainable basis remains above the long-term prices, in couple of quarters, then the regulator would start questioning the utility, the state regulator, saying that why don't you guys get into PPAs? So for that to happen, there needs to be a genuine, demand recovery, not a flash in the pan kind of a thing that today it is 11%, tomorrow again it comes back to 2-3%. So if there is a sustainable basis, there is a demand recovery of 6-7%, tracking the industrial recovery, then the short-term prices would harden, and that would give the trigger to the utilities, the buyers, to go for long-term contracting, which are already in the market and readily available. Coming back to your point around the renewable power being available cheap, and that's what is the utility are then reluctant to buy this power at more than 3 rupee 50 paisa or so. See, renewable power will never become base load, at least in the immediate future. So once there is a genuine demand recovery, you cannot meet the system demand through renewable power. Although in last 1 year, almost 67% of the capacity addition has happened in solar and wind, still the total renewable capacity, energy contribution to the energy mix in the country is around less than 10%. So when there is a demand that comes up, it has to be met through coal-based thermal power. That's when all these projects will have hope of getting a long-term power purchase agreement.
Point taken, Debashish, but my last question to you is, it's the discoms which have to sign these PPAs with all the power utilities, and many of the discoms are still reeling under the huge debt, and they're not financially viable to sign that kind of stuff. Even if they sign, there is payment issues which come in there. How do you see the health of discoms to go ahead and sign PPAs if they see demand for power going up going into the summer?
So that's what again is linked to, as I mentioned, the industrial recovery. What happened in last couple of years is, despite the government bringing in Uday, it was kind of a temporary recovery from the debt servicing that the utilities had. But since the industrial demand was almost stagnant or growing at, let's say, 2-3%, actually the utilities didn't have the paying customers, the industries, the commercial customers who usually pay more than 7-8 rupees per unit of power. So if that demand comes back to the system, discoms will actually have the ability to buy additional power, in fact double of additional power, because that power, the additional revenue comes at 7-8 rupees, whereas that additional power would probably cost 3 rupee 50 paisa or 4 rupees kind of a number. And many of the discoms who will be initially buying that power from the existing PPAs, that would actually come at the variable cost, because they are already fulfilling the fixed cost commitment of those PPAs. So that would probably come at around 2 rupees, and the additional revenue will be in excess of 7 rupees. So the key to the entire revival process is the genuine industrial demand coming back to utilities.
Right, Debashish, thanks so much for joining us on Primetime Live, and of course, Sujit, thanks so much for joining us in the studio with those interesting insights. Now, moving on, a $1.2 billion deal for Fortis Healthcare is imminent. Bloomberg learns that ATPG capital-led consortium is all set to take control of India's largest hospital chain, and the deal could be announced within the next few days. Bloomberg News' PR Sanjay gets us the details.
Remember that for years now, Fortis has been targeted by a group of investors, including IHH and TPG-led consortium. And the latest is that TPG consortium with Manipal is planning to acquire the company. Of course, it is it is an invaluable asset for any company. And one would know that TPG has interest in other healthcare companies as well. So they want to group all under one strong portfolio before having a meaningful and profitable exit. But The key point over here is how are they going to ring fence them from the issues, the controversy which is already triggered by the Fortis promoters. So one is not quite sure about that. How are they going to ring fence them? The deal structure is yet to be known. So they don't want to take the legacy, the problem, the historical issues which Fortis had. So TPG Manipal are going to issue some preferential issue as a part of this acquisition, and they would be staying out of all the liability which can arise in the future.
Well, the Company Law Appellate Tribunal has rejected Binani's contempt petition against the resolution professional. The Appellate Tribunal, in its order, said that the contempt plea is not maintainable. Arpan Chaturvedi gets us all the details.
Well, Binani Industries had initiated this contempt plea against the resolution professional in charge of Binani Cements, and in their application Binani Industries had said that there were actions on behalf of the RP which make for a case of contempt. For example, they said that they were not given proper notice to attend the meeting which happened on 14th March. Binani Industries said that they were given only 1 day notice, whereas they should have been given at least minimum of a 7-day notice. Apart from that, they said that they were also not supplied with the relevant documents that they wanted to attend the meeting. So these were some of the grounds on which Binani Industries had initiated this contempt plea, but the NCLAT headed by Justice S.J. Mukhopadhyay said that a case of contempt is not made out and the plea is not maintainable. However, they allowed them the liberty to approach the NCLT Kolkata, where the insolvency proceedings against Binani Cements is going on, and the bench said that Binani Industries is free to raise their issues at that appropriate forum.
And the fight for Essar Steel rages on. ArcelorMittal, one of the interested companies, says it will challenge the lender's decision to disqualify its bid. Vishwanath Nair gets us the details.
ArcelorMittal India has decided to go to the NCLT challenging the Essar Steel lender's decision to call its bid ineligible. According to ArcelorMittal's statement that came out on Monday, the company is trying to protect its rights under the insolvency and bankruptcy process to bid for Essar Steel. The problem started because ArcelorMittal was classified as a promoter for Uttam Galva Steel, which is already a stressed company, an NPA company with a number of banks. According to an amendment that was brought in by the government in November 2017, any promoter of an NPA company cannot actually bid for an asset under the insolvency process, which essentially means that ArcelorMittal would be barred from participating in any process. But in its statement, ArcelorMittal claims that it has received some kind of confirmation from the stock exchanges declassifying it as a promoter for Uttam Galva Steel, which means that it is still eligible for this entire process. Remember, ArcelorMittal's move comes in right after what happened with New Metal. New Metal, which is the other bidder in the Essar Steel case, had filed a motion at the NCLT in Ahmedabad seeking some kind of declaration of eligibility from the NCLT in the Essar Steel matter. The petition claims that New Metal's application or New Metal's submission of resolution, its submitted resolution plan has not been adequately assessed by the resolution professional involved. Therefore, New Metal is trying to get some kind of intervention from the NCLT. The NCLT on its part ordered that the resolution process can continue as it is going on according to the regular timelines, but that whatever NCLT decides in this matter will be binding on the lender's decision, which will be taken out later. On the 2nd of April, that is when the lenders have called for rebids in the Essar Steel case, and it is said that all 6 participants who had originally submitted the expression of interest would be asked to submit a fresh plan by that time.
Meanwhile, chairman of the JSW Group, Sajan Jindal, said that the committee of creditors did not allow them to re-enter the bidding for Essar Steel, adding that the lenders would have received more money had they allowed JSW to participate.
In this case, we wanted to re-enter, and we wanted to give a very good competition to, and the creditors would get more money if we were involved. But unfortunately, because they felt that if we were given an opportunity, then they will have to advertise it in the newspapers, and they have to call for the bids again, and people may ask for data room to be open. So we gave it in writing to the COC that we don't need any time, and we are willing to participate as is basis. And whatever information we have, we are willing to. But they did not, in their, let's say, their own discretion and in their thought process, they thought that they don't want to give a new entrant a chance. So they did not allow us, which is okay for us. I mean, if they don't want more money, then it's up to them. It's a public money after all. We were willing to participate and give a good fight.
Meanwhile, the Supreme Court has deferred Liberty House's plea to be considered in the Bhushan Power insolvency process to April 2nd. Liberty House UK, which expressed interest in the assets of Bhushan Power and Steel, is challenging the rejection of its bid for Bhushan Power. A new week and a promising start. Indian markets recouped Friday's losses, with gains being led by financials. Both the benchmark indices saw gains of close to 1.5%. The Sensex rose by 470 points, while the Nifty gained 133 points. 16 out of 19 sector gauges compiled by the BSE ended higher. Now, the war of words between the Congress and the BJP on data sharing spiraled today, with Rahul Gandhi dubbing Prime Minister Narendra Modi the big boss who likes to spy on Indians. Meanwhile, the BJP accused Congress of data theft, saying it had taken off its app after the allegations came out in the open. The Congress, however, claimed that the site was dysfunctional. Rahul Gandhi said the Prime Minister was misusing his position and the Namo app secretly recorded audio, video and contacts. Gandhi claimed that the app even tracks location via GPS. The Congress president also claimed that 13 lakh NCC cadets are being forced to download the app. Meanwhile, BJP spokesperson Sambit Patra said that data analysis for making services better is not equivalent to spying. Well, BSP chief Mayawati today accused the BJP of trying to create a rift between the newfound alliance between the SP and BSP. Mayawati said the friendship between the two parties was in national interest and urged the non-BJP parties to come together to fight the NDA in the 2019 general elections.
सपा व बसपा की आई नजदीकी को लेकर जो किस्म किस्म की बयानबाजी कर रहे हैं, तो उन्हें मैं ये बताना चाहती हूँ कि हमारी ये नजदीकी अपने स्वार्थ के लिए नहीं बनी है। बीजेपी के लोग सपा व बसपा के लोगों को कितना भी भड़काने की कोशिश क्यों ना कर लें, तो भी ये लोग देश व जनहित में इनके बहकावे में कतई भी आने वाले नहीं हैं, क्योंकि हमें व अन्य और सभी विपक्षी पार्टियों को मिलकर देश में आम जनहित में इनको इस बार केंद्र की सत्ता में आने से जरूर रोकना होगा।
Well, the UIDAI has refuted reports that there has been a security lapse in the Aadhaar system. As per the reports on Znet.com, a data leak on a system run by a state-owned utility company allowed anyone to download private information on all Aadhaar holders, exposing their names, their unique 12-digit identity numbers, and information about services they are entitled to or connected to. But the UIDAI responded, saying there was no truth to the report on the website and that the Aadhaar system remains completely safe and secure. So coming up on Primetime Debate, we will be speaking to Karan Saini. Now, he is the security researcher who brought to light this leak in the Aadhaar system from that Znet report that I was just talking about. We'll also be speaking to Saket Modi, well, security expert, to understand the security and privacy concerns that this latest data leak brings to light. In other news, US President Donald Trump has joined the likes of Germany, France and the UK in expelling Russian diplomats. This is in response to the nerve agent poisoning of a former Russian spy in the UK. The expulsions are the most aggressive US move against Russia under Trump. So far, the US has expelled 60 people, including 48 attached to the Russian embassy and 12 at the country's mission to the United Nations. They have 7 days to leave the country. So how would this affect the relationship between the erstwhile Cold War rivals? Kevin Cirilli of Bloomberg News tells us everything in this report.
President Trump announcing that he is suspending 60 Russian diplomats from the United States, dozens of them believed to be Russian spies. In addition to that, the United States also announcing that they are closing a Russia consulate in Seattle because of its proximity to a U.S. naval base. Now, this comes as around the globe, NATO and European allies taking similar actions in response to that chemical attack from Russia on a former UK spy. So all of this this, when taken in context, is President Trump's most aggressive stance yet against Russia. Senior administration officials telling reporters that the president consulted with NATO allies before taking this step. This did not come up last week when the president spoke with Russia President Vladimir Putin via telephone, but it comes, of course, as there is intense scrutiny on President Trump's relationship with Vladimir Putin.
Nearly 2 years after Uber sold its business in China to local giant Didi, the world's largest cab aggregator is ready to shut shop in 6 other Asian countries. Uber has entered into an agreement with its Asian peer, Grab, to sell its business in Southeast Asia. Kayungi Park of Bloomberg News gets us the details about this mega deal.
Well, it's going to involve almost all countries within Southeast Asia where Uber has a presence in, including Singapore, Indonesia, Philippines, Malaysia. So it will be across all board in Southeast Asia. This basically deal will make Grab basically take the dominant role in the hail market here in Southeast Asia. Obviously, they will become bigger because both Uber and Grab have been in this very intense fight over who will be number one and who can grab more market share. And in doing so, they've been, pumping up a lot of cash in the process. So this will basically give Grab an upper hand. But at the same time, this will also open up a lot of competition from the local companies that are offering similar services here in Southeast Asia. So it's good for Grab, but then again, there's still competition coming in that field.
Well, we'll be speaking more on that story as well in the next half hour, where we'll be joined by Satish Meena, Senior Forecast Analyst at Forrester. But up next on Primetime Debate, remember, we'll be speaking to Karan Saini, the security researcher who brought to light the latest data leak in the Aadhaar system. We'll also be speaking to Saket Modi in that particular chat to understand what the security and privacy concerns really are and what this latest data leak means for all of us. But that's all the time we have on this bulletin, so thanks so much for watching and stay tuned to Bloomberg Quint.